Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's episode, we're going to be looking at should you buy GameStop, AMC, and Tesla, three of the most popular stocks out there. We all know the absolute craze that all of these stocks have played with the entire market. You know, a lot of them are extremely volatile, but a lot of people are still buying them. We're going to be breaking down, should you buy them? Is there still opportunity there? Or did we kind of miss the train? Is the opportunity gone? So I hope you guys enjoy it, and overall I hope you guys get something of value out of this video. And if you guys do, hit that like button and subscribe, because at the end of the day it really helps me out. So now roll the intro, let's go. Bam. Alrighty guys, so the very first one that we're actually going to go ahead and look at is GameStop. Ticker symbol GME. Now, this one has been in the news a ton, and honestly, we did cover it on the show, but we're still going to be breaking this thing down because every day something different changes, whether it's stocks, investments, all of that. So you guys can see really before these huge spikes, this thing really wasn't moving a whole bunch, right? You know, lows here at $5 wasn't doing a whole lot, right? And if we actually go to the 3-year chart, you guys can see it a lot easier. You know, it was actually decreasing in revenue, wasn't doing very good. Stock value slowly declining here. And then it just slowly started picking up, and we had this huge explosion. Really went from like $15, $20 all the way up to highs here at $483 before immediately selling off, right? Look how overvalued this thing was. Anytime a stock really crosses this RSI, it's due for a little bit of a temporary setback, okay? So this is where we had this huge fall back down, and it hit this $50 level. So it went from $480 to $50. And then what it did is it happened again. It went from $50 all the way up to $360. Sold back off down to $150, and really hasn't been doing a whole lot. A little bit of some consolidation and going up here to $350 again before selling off back down to $200. So the biggest thing, should you buy this? Now, I always think the people that are going to be buying this are going to be, most of the time, they're going to be beginner investors trying to get rich quick. That's the biggest thing about all of these stocks, right? Is they made a ton of people a lot of money really, really fast. Because if you guys actually compare this to, let's just say, the S&P 500, which is a fantastic investment, that averages a return of 9.8% per year. So virtually, you could have bought this stock at $15 in less than, 2 months. You could have sold this for $513 with a return of 2,622%. That would have pretty much wiped out all of your long-term investment in about one single month or 2 months or whatever that may be. And so you had a lot of hype behind this, but this hype brought volatility and it brought a lot of risk. So you guys can see it sold off, and now it hasn't been doing a whole lot. The reason why is because I feel like a lot of people are kind of staying away from it. Some people are just heavily for it. You know, you're either for it and you love it, or you think, okay, this is absolutely crazy. Why would I put my money into something that's super, super risky? So that's just my opinion, but me, I'm staying away from it. I would rather invest in a stable, solid company that carries an outlook of 2 to 5 years that is going to be an absolute powerhouse, right? Imagine if you could go back and buy, Apple or Amazon or a company like that. This company the train already left the station multiple times. So I think for this one, we did miss out on some opportunity. Now, talking about AMC, it's very similar. It's very similar. The reason why I say that is because you guys can see lows here at around $1, came up to about 22, which is still an absolute fantastic return, right? That's about 600%, we could say, which is awesome, right? It did sell off a little bit and just kind of hung out near and around that 200 moving average line. Okay, that yellow line here you guys can see. So now it's just been hanging out, using it as some support, and then we had this huge amount of buying pressure, right? Went from $12 to $77, giving another return of about 600%, which is awesome, right? So this one doesn't grow as fast as GameStop, but it's still outperforming the market. And then it really found some resistance here at 62 and a lot of support near about $40, right? It came in contact, several times, and we got a lot of buying pressure near and around that. So I think that this one definitely does carry a little more potential than GameStop just on the swing trading perspective. But as a long-term investment, I think in general, a lot of movie theaters are in a lot of trouble. The reason why I say that is because over the past year, everyone, we had all these lockdowns and movie theaters got hurt really, really bad. But we had companies like Disney, HBO, Hulu, all these companies that still actually made movies. And instead of sending them to these, theaters where they have to split the profit, split a whole bunch of things, they just created their own site, put it out there. They have extremely high margins on them, and they make a ton of money. So I think in general, movie theaters aren't the greatest investment right now. It is going to be a little bit of a higher risk, but there is still a move from 46 to at least 63, just that basic support and basic resistance. So I think that could possibly be a swing trade move. But even if you did that, I would highly recommend, setting your stops below that 200 moving average line and just honestly just ride it out. That's what I would do if you were going to swing trade it. But I don't have any shares of AMC. I just think it's going to be a little more volatile than I would like. But one that I do like, and I do have a ton of shares of, is the one and only Tesla. All right, so Tesla is still a volatile growth stock. But one thing that I like about Tesla is they have increasing revenue, increasing margins. They're getting stronger and stronger as a company compared to some of these other ones that the only thing that they've done is sell their stock and dilute and pay off some of their long-term debt, which is still good, don't get me wrong, but it's not as great as all of these other things. So you guys can see Tesla does have a nice solid upward trend. Really hasn't been doing a whole bunch lately. Does have some basic resistance near that 200 moving average line. Resistance or basic support 200 moving average line. Resistance here is about $800 a share. I think there's definitely move from 750 to 800. Hopefully we can get a breakout from there and then go all the way up to 900. That would be the ideal plan. But one thing I think a fantastic strategy for this one is dollar cost averaging, because it is still a little volatile, so it does go up and down. And you guys can use the volatility of Tesla to your advantage. And so you don't have to really get shaken out of the stock, and you guys can still absolutely kill it and make a ton of money off it. So guys, these are really the top 3 stocks, to understand, and most popular stocks. So I hope you guys learned something from it, and I hope you guys got something of value, because that's the biggest thing here. Alrighty guys, so that is it though. I hope you guys enjoyed the episode, and if you did, hit that like button and subscribe. If you guys have any questions, concerns, ask them down in the comments, and don't forget to check out my course down below, and you guys can use promo code DIVIDENDS to get 50% off. So now, we'll see you later. Take care.